So the dollar is the chart every year that we really, these levels that you see on the chart here, we have these in every year. We kind of don't even, we should take some of them out. But I know we've got some supply zones sitting well above here. Let's take a look. There they are. So right now, the dollar is sitting in the 92.25 to 92.50 range, right? Okay, if I scroll left, we see sitting just around, call it 94 to 94.50, and then 96.50 to about 97.50. We have a couple supply zones sitting up there. Now, they don't look like supply zones, so let's go down to the daily chart and you'll see why they're significant levels. We'll go over the demand side next. So if I scroll left, okay, so there's one of the supply zones there. This is that near-term one. Now, we already have a retest into it, and that retest went almost halfway into the level, so we're going to be a little cautious there, but I'll show you what we'll do. Okay, so remember, inside this level, this yellow box here, there are multiple price points. This isn't just, this supply zone doesn't represent one price point. That's the whole point of the zones. So, it represents multiple price points. As you can see in this pullback, price went all the way up to about 94.15, right? So that means, I'm going to move my line up there. So that means the orders sitting 94.15 and lower have already, some of the sell orders here have already had a chance to be filled with this first pullback. However, above that, there's been no, none of the orders above that had a second chance to be filled. Okay, so we'll go, call it 92.10 to 92.50 would be our next zone. Okay, so that's the dollar. And then, of course, sitting up here in the, call it 96.70 to 97.50 is the supply zone above that. And for those of you that have been with us for a few years, again, not patting ourselves on the back, but we haven't had a hard time picking the long-term direction in the dollar. I think we've hit it, all the major turning points every year for about, 3-4 years. And again, it's not patting ourselves on the back. It's not that hard to do. What I'm encouraging you to do this year is, focus on some of these longer-term plays. And boy, once you get a taste of one, you're going to fall in love with it. We do have some demand sitting below current price in the U.S. dollar. Let's go to that here. That one. So obviously that comes at around 90 to, you need about an 89.50 stop on that one. Okay. And again, most of you are not going to trade the dollar. When prices come into one of these supply or demand zones, you're going to probably be looking at the euro or yen or, pound or some opposing currency, right? So having said that, let's go to the yen. This one, I think, will be kind of a quick one. We do have a really nice supply zone sitting above current price. We'll go to the daily chart for that. I think we're going to use the daily. No, we're going to use the weekly, sorry. In our next session together, we'll get back on the onto the short-term trading. Oh no, we did it. We did have. Is that the daily chart? Oh, I'm sorry. There we go. So if I put a horizontal line across current price, I'm sorry, not current price, but the high here, right? I'm only doing that for a reference point. I'm going to scroll left. I'm going to blow this up. You'll see that we're right into this really nice supply zone here. We just basically touched that level and fell. So if I go up to there, it's about 121.90. So this is just, all this is saying is pretty much just any trade above this recent high. Look at how prices just touched that line and collapsed. So what does that tell us about the supply-demand equation in that zone up there? Small imbalance or big imbalance? Yeah, big imbalance. Exactly. And two things tell us that. Number one, the fact that price just touched that level in turn. Number two, that it really collapsed from that level. Remember, we're looking at a daily chart here. Had a couple more attempts to come back there and couldn't. So now I don't know for sure that this trade's going to come up. There's a good chance it will, but anything above 121.80 in that zone is looks to be very shortable and looks to be a strong short. We're also setting up for a potential bull trap here, which adds I'd say adds to the trade, adds to the probability of the trade working out well. The reason for that is if prices come back up to this level and go above this high, is that going to be bullish or bearish for most traders? How are most people going to view that? Even some bigger fund managers, yeah, most people are going to view that as bullish, right? The break of a new high, it's a very bullish signal to novice traders. Right. So a bullish signal into a price level where you clearly should be selling because those are clearly retail prices is we want to be the seller. If we're able to sell short up here, what's the potential move? Well, we already have evidence that there's no significant demand until 115.53, and then of course down in here we'd expect some demand. But I would say the ultimate target is probably more like down here. Okay. So let me put this zone in, and then I'll put a blue line in here. And again, we're gonna monitor these throughout the year. Okay. So we would want a target sitting just above that level. I'm gonna put it right there, just above where all the hesitation started. Okay. So not in here, because if you go to a smaller time frame, you're gonna see there's some demand in here. I'm gonna go right up here for a target. Okay. And again, just some more evidence so you know that these are very possible. Again, for those of you that have been with us for years, you know that we've been, according to the supply demand strategy, we've been very bearish gold for probably about 2.5 years now. Okay, and still bearish gold. Okay, so that's our opportunity in the N. Remember, on smaller time frames, there are plenty of more, there's plenty of levels inside all this. Plenty. But today, the purpose of today's session is to focus on, longer term trading. The other thing I want to introduce to you, not in this session, but an upcoming session, so we can take advantage of it this year. Another thing we do at Online Trading Academy is the one thing we'll never do is take a breakout trade. It's a very novice move, right? We want instead, if you have a supply or demand level, prices at some point broke out of that level. So we'll get in on the retest of that level if it scores out high enough with our odds enhancers. But the other thing we'll do sometimes is anticipate a move. In other words, while price is basing sideways, sometimes we'll be able to get into, we'll enter a position before breakout. In other words, not waiting for prices to break out, but getting in well before the move happens. Okay, when prices are just kind of sitting there. The way that we anticipate this is, again, right at the heart of core strategy, supply and demand.